I've been working with expats and doing international taxes for a long time now. It's always interesting to see through every different US administration, you have people on both sides of the aisle that vouch to leave the US if certain person becomes the president or certain administration comes in. In recent years, I feel like that rhetoric has definitely gotten stronger along with all other political rhetoric in general. But particularly when Trump became president, there were a lot of people out there that said they were going to move from the US if Trump became the president this second time in 2024. And Ellen DeGeneres is one of those people that said they were going to leave and actually did it. So Ellen DeGeneres was living in California. She sold her house in California, bought a place in the Cotswolds where they put millions of dollars into that property to really fix it up and make it an amazing property. You can find pictures of it online. It's really neat to see. But they sold the property in California, and then within a year or close to a year, they actually sold the property in the Cotswolds as well. What I want to talk about in this video is what I would be thinking about if I was Ellen DeGeneres' accountant, and also how these concepts apply to normal humans like you and me with US tax problems and people moving outside the US. The first thing I want to talk about is the sale of the property in the US. So a lot of times when people move outside the US, they're going to sell their regular home in the US so that they can purchase something in the foreign country that they're moving to. There is a principal residence exclusion of $250,000 if you're single or filing separate, or $500,000 if you're filing jointly, if you've lived in that home as your principal residence for 2 out of the last 5 years. Now with Ellen DeGeneres, I'm pretty sure that house was worth about $30 million, so I'm not sure the $500,000 exclusion is going to do a whole lot for her from a tax perspective, but it's something to definitely look into if you're in the normal range of pricing and house prices. So it's one thing to be careful of. One thing I see with some clients is if you're liking this video, you should really check out my newsletter where I put out different tips and tricks, latest law changes that can really help you save money and save complexity if you're living or investing abroad. Just think how much you could save with the right tax advice. Hold on to those properties a little longer than they wanted to. You know, maybe they want to make sure they like the foreign jurisdiction. And I'm not saying sell the property solely for purposes of the tax benefits, but I would just say be sure you're aware of that timeline so you don't unintentionally miss that 5-year mark. And all of a sudden, now you're paying taxes on $500,000 worth of gain, which could have been completely excluded if you'd have done it within that 5-year benchmark period. So the other thing is the sale of the foreign property. Now that same principal residence exclusion applies to foreign properties the same way it does for US properties. So you have that same 2 out of the last 5-year rule that you could apply to that foreign property if it was your principal residence. But one thing to look out for on those properties is the exchange rate. So the IRS looks at you as a US dollar person regardless of where you're living, even though clearly if you're living in the UK, you're going to be operating in the British pound. So you purchase that house in the British pound, you're going to sell it in the British pound. If you have a mortgage on that property, you have to be careful of the exchange rate gain on that mortgage. So if you received a loan for say £100,000, and let's say on the day you received it, the dollar to pound was 1-to-1. But then when you sold the property later, if the pound had risen and now the US dollar amount is worth say 100,000 pounds is now worth 110,000 US dollars, you've technically earned $10,000 in the eyes of the IRS because of that exchange rate gain. So that's something that trips a lot of people up and to be wary of. If you have a loan on the property, be careful with the exchange rate. It can go either direction. You can have a loss or a gain depending on the exchange rate and the fluctuation, but just be wary of that and just know that it exists. So the last thing I want to mention is just complication in general. If you're moving outside the US, remember that you're going to have to deal with the tax system of that country. So the UK in particular, it's a very complicated one because they have a lot of complicated rules just like we have in the US. And one thing that makes them even a little more complicated is that they have a fiscal year tax system. So in the US, we operate on a calendar year. There they operate on a March 1, or I think technically an April 4 year end. So when we're trying to apply things like foreign tax credits, foreign earned income exclusions, we're having to apply at that UK fiscal year to the US calendar year, and it really complicates some of the calculations. So be sure you're working with a knowledgeable person in the US and in the UK, because you need somebody in both jurisdictions that understands that that there is a coordination event going on to make sure that you're taking the same positions, reporting the same income in each jurisdiction during the correct tax periods. So Ellen DeGeneres, of course, she's not like the rest of us necessarily. We don't all have $30 million properties in the Cotswolds that we're selling. But again, just like all these other celebrity videos I do, the concepts with the international tax planning that come into play with these people are really the same at the end of the day that we're dealing with as normal people as well. If you have questions, if you're looking to move abroad, if you're selling properties abroad, anything to do with international tax, feel free to reach out to us on the website and you can book a consultation with me and we can get a personalized plan for your tax situation today.